Hello, everyone. I'm here with Susan, and she's going to be talking about how to drastically improve your tax saving. It's a great topic for all of us. So I'm so happy to introduce her. I'm going to go over some housekeeping for you to understand what we are doing. Let me share my screen, Susan. All right, Brainstorming Coffee Group, what we do here. If you are someone that have an experience and you have results and you are passionate about a specific topic, this is your place. You can come here. You're going to be able to share your experience with other people and you will be able to help. So we are taking a little bit of your knowledge and sharing with other people. That's the gift that we have. That's the best that we can do. That's what God put in my heart. And we want to help other people. This is the best way to help, is by giving. So let me go over really quick. The main topic is how to drastically improve your tax saving with Susan. She's going to introduce herself right now. But before, I remember one time that she texted me saying, I believe business is just God's excuse to have fellowship and fun. So this is so good. I love it. I'm so happy and pleased to have her here with us today. This thought from Joseph Bonkowski. He says, the best thing in life are tax-free. So this is a great thought to share with everyone because we're going to be talking about taxes today. Another housekeeping will be time. We can go over the have already set up. Be tolerant, compassion, welcome all kinds of personality to this group, zero judgment, clean mind, and acceptance. So with this being said, I'm more than happy to introduce the topic today, and I will stop sharing the screen right now, and I will pass to Susan. So now Susan will be able to share the screen, introduce herself. She's an amazing tax coach, and she's gonna talk a little bit about this topic today. Enjoy.
Thank you, Frania. I appreciate it. Thank you so much for the opportunity to serve today. And high five to all of you who are here or you're showing up for your business. So I'm going to share my screen really quick. And we are here. And yes, we're going to talk about how to maximize drastically your tax savings through organization. So but before we continue on, I just want to talk a little bit about who is tax coach Susan. And I am an enrolled agent. And you may ask, so what is an enrolled agent? It just simply means that, like attorneys and CPAs, I have earned the privilege of representing taxpayers before the IRS anywhere in the 50 states. And generally, we are unrestricted as to which taxpayers we can represent, what type of tax matters we can handle, and which IRS offices we can represent clients before. I work with people's finances for over 28 years in the bank and in my tax practice, teaching QuickBooks, processing different tax returns, and representing small and big businesses before the IRS and in-person audits. However, after seeing these people feeling with so much frustration and pain in the small business owners due to that tax confusion and stress, I decided to do something crazy. I decided to sell my tax practice after 13 years of service.
Wow.
To work on simplifying the interpretation of the tax law to protect solopreneurs from that tax chaos and overpaying taxes.
Wow.
So my purpose is to skyrocket your peace, your time, and of course, your cash flow.
Excellent.
Yes. So you, as a human being, you have fun impacting the lives of others.
Yes, that's beautiful. Thank you, Susan.
I believe you will start to fall in love with your accounting numbers. You're not going to run away. You're going to fall in love. One of the reasons why I'm doing this is because according to the U.S. Bureau of Labor and the SBA, about 20% of businesses fail in the first 2 years. 45% fail in about 5 years. 65% fail in the next 10 years. And only 25% of businesses make it to 15 or more years. One of the main reasons I read is because of poor management. I believe it's lack of knowledge, and that's the reason why many businesses fail. My goal is for those of you who are starting a business for the first, second, or more times, that you go from solopreneur to superpreneur.
Oh, yeah.
Okay. Take off and fly your business feeling confident that this time you actually understand the dials of taxes and accounting. So I'm here like your mom. No, wait, that's going to make me feel too old. As your big sister. Stop trying to fly your business without looking at your dials of your financial cockpit. In other words, stop trying to fly your business without looking at your profit and loss and your balance sheet. It's totally nuts.
Yeah.
You are like the main pilot, and your accountant is like the co-pilot in your tax part of the business. As a main pilot, you oversee that your co-pilot, which is your accountant, is flying in the right direction, and that both of you do not go to the no-fly zone, in other words, outside of the tax law, so that you guys don't get killed by the IRS. Too many businesses get killed by the IRS. In the same way, the IRS holds you, the business owner, accountable for following the tax law. So it is important to work with an accountant, because taxes may not be the type of business you're running, but it is critical that you have basic but clear understanding of how taxes and accounting work, so you continue to be in charge the biggest expense in your business, which is taxes.
Exactly.
I have created 7 steps to help your business airplane take off and maintain that altitude. But before, let me tell you this. Accounting is the language of business, and you have to be comfortable with that as you are with your own native language to really evaluate your business. That's what Warren Buffett says. So whatever you're doing right now, try to block a few minutes to take advantage of this opportunity and hear this presentation, not just with your mind, hear it with your heart. And these are the 7 steps. Entity setup, to take off your business from the right gate. Digital file setup. So people actually waste an average of 42.7 hours each month looking for things. This organization, it's crazy.
Yeah.
It hurts my stomach just to think about that. This organization setup will enable you to find the receipts you save, but you save it, but you can never find. Well, this is gonna help big time. And then number 3 is how you set up your bank account. This is the setup for wealth multiplication. So, because this way has worked for thousands of business owners to hack their mindset to finally have cash flow. Your bank accounts are like the main fuel pipes of your business airplane. If it's not properly set up, the leaks of fuel will actually or eventually crash your business airplane. And number 4, bookkeeping setup. This is what we're going to talk about in this chat. This is like the setup of your airplane's engine. It is a main structure of how you will run your day-to-day business. Incorrect setup can waste your time and cause cash leaks. I call this leak distraction tax. People are way too distracted.
Yeah.
Because it gives the IRS flags. And then number 5, you must have a tax cockpit set up. These are your tax dials to save you time, guide you during tax season, and drastically diminish the chances of getting audited. Main cockpit setup. This is really awesome. These are your bi-weekly business updates dials. This is your accounting cockpit to fly your business throughout the year, to maintain your cash flow, your wealth management, and whatever adjustments you inevitably going to have to do during the year. And number 7, resource cockpit, custom tax and accounting resources to make sure you do not fly in the dangerous zone where your business can get killed by the IRS. This way, you know that you're doing the right thing.
Okay.
Now, we're going to talk about the book setup. We will start with a basic but crucial information of the balance sheet to bring about clarity about the main dial, because the balance sheet is your main dial.
Yes.
It's your main dial and your cockpit panel in your business or your flight deck, you know?
Yes.
So if you have questions, please write them down, and I will answer them at the end.
Nice.
So, all right, so are you ready?
Yeah.
High five, high five. Okay. All right, so these are the financial reports that are known in the accounting environment: balance sheet, cash flow, and profit and loss. Solopreneurs think that the profit and loss is the main report. Let me tell you, it is not. About 50% of businesses do not look at their profit and loss. So do you see the correlation with the 45% of businesses that fail
Exactly.
within 5 years?
That's true.
So, but today, because of time, we're going to focus on the profit and loss and the balance sheet. And these images, be not afraid, by the way, be not afraid, just listen with your heart.
Yeah, you know, Susan, let me interrupt you right there. You know that I know some people that they said that they were working as a manager and you know, like a store manager and things like that for companies, and they did not know any of this term. Like they were able to read a profit and loss and balance sheet like 12 years later. So a lot of people are managing stores and they have no idea about this. But we need to know as a business, as a you know, entrepreneur.
Yes, thank you, thank you. This is what caused a lot of pain in my heart, because too many businesses are crashing due to lack of knowledge.
Exactly.
And so the main financial report is actually your balance sheet. And I'll show you why. Unfortunately, too many solopreneurs do not use it because the IRS doesn't require it every year, but it's actually beneficial to you in an audit, and it is to your advantage, not to the advantage of the IRS maybe, but it is to your advantage as a business owner to actually have, run, or use a balance sheet. And today, I'm gonna show you what is a balance sheet. Okay. So balance sheet is comprised of assets, liabilities, and equity, but a lot of people do not understand that. So let me tell it to you in a different way. Assets, it's simply cash and things that business has.
Okay.
Does the business owes for those things? Or does the business owns those things? That's what a balance sheet shows. So, cash and things that the business has can be cash, right, in the bank. Can be a truck, like my sister, she's got a trucking business.
Okay.
And, or it can have properties, like for our landlord that's investing. But now we see here that this little house here that is the same color blue, it means that the business owes money for one of these properties that it is in assets. And we see here that the cash, the truck, and the other house is owned by the business and the equity here. That's why it's the same color.
Mhm.
So the business owns this one property, the cash and the truck, but owes money for this little other
Exactly.
property.
That make a liability.
That makes it a liability. That means
Yeah.
the business got a loan.
Exactly.
So now, if you look at your bank account and you have $100, then where did this $100 come from? We got to look at the bottom of the balance sheet to find out where these $100 came in. So as a business owner, you do not need to know the debits and credits, but you do need to know how to read your balance sheet. And if we go to the next slide, now we see that $20 was borrowed from a friend, right? $50 here, and I put your name as an example. Like, this is your side business, Frania.
Nice.
So Frania, that $50 came from Frania's pocket.
Okay.
And $30 right here was left over from net income. They call it net profit. In other words, your sales minus the expenses equals your net profit or your net income. So we see it in equity. There is a $30. So in the next image, I'm going to give you more clarity as to how these show. So let me show you.
Okay.
You see now in the assets, we see again where that $100 came from. Loans, $20 from a friend. $80 is from total equity, which is at the bottom. And now when we add it up, we have $100. Now we see why we have that $100 cash in the bank. So now we have $100 total in assets. And we go and take a look at liabilities, which is how much does the business owes, right? So that means that the business really doesn't own these $20 because it owes these $20. But the business does own the $50 and the $30. So now we balance. That's why it's called a balance sheet. We balance. We have $100 in assets, and now we have $100 in liabilities plus equity, which is what the business owns and what the business owes.
Okay.
So, excuse me. So now on the net income, we need to find out how did we get these $30. And in order to find out how we got $30, now we're going to zoom in. Like, we're going to go very little there, and we're going to see, and voila, right there is the profit and loss. Like a magician, right there. But you see that now the profit and loss, it's not the main one, it's the balance sheet. Now we see that in the profit and loss, the sales were $90 and expenses were $60. And now we have, after that, $30. And that $30 is right there in net income. And now we see why we have that net income right there, because the same ending amount and from the profit and loss is right there. The same exact amount is right there in equity. All right. So one more. I'm going to just take you a little bit deeper, hopefully. Okay. We have the same scenario, $100 in the bank, the loan $20. But here, instead, Frania, instead of putting $50, she put $20. And she has retained net income, which they also call retained earnings, but it's the same thing. It's just a way to, to confuse people. is $30, and net income is $30. So retained net income is the exact same net income except from prior year. That's all it is. So now you have the $80 in equity plus the $20 in loans. You have a total liability and equity of $100. And now we know why we have, or where this $100 cash in the bank came from.
Okay.
And now you see why it's important when you see a business and you see that maybe $90 came from financing, from a loan, and only $10 from the profit and loss from operations. Then we know that business, it's like an airplane ready to crash anytime.
Yeah.
Yeah.
Wow.
So you want most of your money to come from your profit and loss from operations. And of course, I need to tell you, these $30 here, profit of net income, this is not your real profit. This is good for the IRS to charge you taxes, but it's not the real profit. You need to know that. So working with hundreds of small business owners, I noticed that there's a big mess on the way they organize their bookkeeping accounts and the way they post expenses from one year to the other. So for example, telephone expenses, sometimes I'll put it into the other expenses, and then another year they'll put it into office expenses. However, this mess is not your fault. This is why. The general accounting principles has their way of organizing their bookkeeping accounts, but the IRS has another way, which is different from the accounting principles. So no wonder there is this confusion, and no wonder people are just like doing their own thing unless they get audited. So you're wondering, okay, so what is the right way to do it? I'm glad you asked.
Exactly.
After years of working with hundreds of big and small business owners and representing taxpayers in different types of audits, I have come to this conclusion.
Wow.
Forget the general accounting principles. Forget about it. Don't even think about it. Follow the way the IRS has organized their bookkeeping accounts in their different forms and maintain, I'll repeat this again, and maintain a balance sheet. For example, Form 1120S actually has the profit and loss set up, like right there in the front page. It's right there. And the balance sheet setup is actually in the fourth page. Like, and I know you're probably thinking, yeah, but still not easy to follow. Just wait a moment. Let me tell you why it is to your advantage to follow the IRS bookkeeping organization. 3 main reasons. You and the IRS would be in the same bookkeeping organization, so it's easier and faster to fill out the tax forms during tax season. It will help you to report expenses in the same bookkeeping category from one year to the next to eliminate red flags, because people don't know, but they are actually igniting red flags because of that disorder.
Exactly.
Number 3, it's in an audit, it is easier and less confusing to match your expenses with what the revenue agent is viewing. So you are not looking somewhere else for the same expenses, while the revenue agent has everything in front of him, you know? So you don't want to be running like a chicken without a head, while the revenue agent is just having all these things like, oh, we have money here.
Exactly.
Yeah. So I know that you're thinking, I still do not know how to follow the way the IRS has these categories, but to bring clarity and to make it simple for solopreneurs, I have prepared in Excel the correct way to organize your bookkeeping accounts for 3 categories. Number 1 is for you guys that are solopreneurs that follow the Schedule C. For those of you who are landlords who file the Schedule E, and for those of you who are shareholders of your S corporation. And voila, here it is. So I want you to see these. The first column, the green one, is for solopreneurs that file Schedule C. And this is the way the IRS wants it. Now, this is a copy. So you see those little red things in here? That's me guiding you through what to put in those accounts. This right here, you see how advertising, I don't know if you're able to see that screen, but you see how advertising is right here at number 8 for solopreneurs or LLCs, owners, but it's different for shareholders. It's right, it's in a different place. So they have it set up differently, but if you are a landlord, for example, you want to follow this format. If you are a shareholder, you want to follow this format. And so it is long. So let me just show you like the image, because it's long to show you in Excel. But here is an image of the profit and loss, how it should be set up. And this is the image of the balance sheet of how it should be set up. So if you would like a copy of these bookkeeping account set up, just send me your email or your phone number to 407-588-8855, and I will send it to you totally free.
Nice.
Yes.
Nice.
And now I open these for questions. If anybody has questions in regards to any of these slides. Okay.
Thank you, Susan, so much. Thank you for all the information you are sharing with us. We have Lucy, she is still on, and Jackie, Rudy, and Lourdes as well, Sergio. So, and Amy as well. So thanks, guys, for being here. Yeah, we opened the section, the Q&A, and I know there's a lot of numbers, information here, but if any of you would like to openly open your microphone and you can say hi and ask any question, Jackie or Lourdes, so you're more than welcome to ask your questions.
Hello, hi, this is Lourdes.
Hi, Lourdes.
Hi, everyone.
Thank you for being here, Lourdes.
Thank you, Frania. This is a great topic for all of us, I guess. I'm a solopreneur. I'm an insurance agent. And so I do have a question for your expert here. I was wondering, as a solopreneur, is it more beneficial to be what type of business, LLC or something else?
Excellent question, Lourdes. As a solopreneur, it depends on how much your net income is. And actually, I have it in one of the steps here where the first step is how it's the right entity. It's the right entity so that you can take off from the right gate. And it depends how much your net income is. I've done several types of calculations, and the right amount to become or to be an LLC is, as long as you make below 30,000, you want to be an LLC.
That's good.
Yeah.
Good to know.
The moment you start making more than 30,000, that's when you want to change to an S corporation. If you work with an accountant, because you're going to have to pay an accountant to do your taxes or your bookkeeping, and at the beginning, you don't have to worry about payroll. And so as long as you're going to make less than $30,000 in net income, it is to your advantage to be an LLC. Mhm.
Okay, and so you mean once we get over the 30,000, we need an accountant, and then we can change to an LLC at that point. Is that what you mean?
No, you can hire an accountant anytime, but
Okay.
if you make less than 30,000, you want to open an LLC. You want to be an LLC. Only if you make over 30,000 in net, not gross, but net, meaning sales less expenses, you net 30,000. That's when you want to change from LLC or convert your LLC to an S corporation.
Okay.
And you don't have to open another business. You just change the close of your LLC. You put new close of S corporation, and you file a form with the IRS, and you tell them, hey, I want to be taxed as an S corporation. And that's when you do it after your net profit is over 30,000.
Mm. And Lourdes, I don't know if you have any, I mean. if you
No,
have-
I just want to follow up acknowledging that, we all should be working with an accountant, basically. And I understand that that's the best thing for all of us to maximize our tax returns and keep our business right on the line.
Yes, it is better to work with an accountant, because when you have your own business, your mind is about productivity, because you have so much already to do with your business. And having to worry about taxes, it's not really, I know that a lot of people want to save money. Unless you are already an accountant, that you are able to do your own taxes, and that's a different story. If you're already an accountant and you're going to do your own bookkeeping, and you're going to do your own payroll, and you're going to take care of everything about taxes, then you just open an S corporation. But since you're going to work with an accountant, you are better off, because after running the numbers, you're better off just waiting until you make over $30,000 in net income to change to an S corporation. But it is good, it is important to work with an accountant, because the tax law is really a jungle. I got lost in the jungle for a while. And so I found my way out. And then after I found my way out, then I had to go back with my own, not how the IRS wanted me to go in this tax jungle, but I went on my own. And I read books, I did research on my own, because I wanted for myself, I wanted to know how the IRS, how that tax law works with my own lenses, because the IRS teaches us one way to pretty much say how to say no about everything. But I wanted to be able to see how you can do something. And I wanted to see it for myself, how we can make these work for business owners, and how to simplify this nut, because it's like a nut. It is so, so huge, so complex. And so it took 14, 18 hours straight, many days, months, to do my own research. And all of that, because I first did it because of my son. I was thinking, oh my God, this is a silent frustration people have. And I don't want my son to be there lost in the jungle, like with everybody else. This is nobody's talking about how frustrating this is. This is not fair. So I decided, you know what? I got to do something, because, in life, we don't want to leave our kids like to fend for themselves. And in my case, my son was already 20 years old. Someday he's going to have his own business. I'm like, I need to do something. Before I leave this earth, I need to do something. So I decided to go back into the jungle and really try to make sense and make sure that everything that we save the most amount of taxes legally, but that we understand how we're doing it, that we understand how these things work, so that once you understand the basics, then you feel so much peace. You feel like, oh my God, the whole time I could have known this, if somebody would have just explained it to me. And so in this case, I created those steps because it makes it easy. There's a lot of information out there, but I'm more about, give me the steps, because there's so much information. You're still like, oh my God, like, but how do I put that together? And that's why I put the steps,
Yeah. And Susan, now that you mentioned that, I was thinking about a lot of people that they get afraid of numbers, like, they don't want to deal with all these questions and numbers to put in together. They're afraid to see the reality of their own business, and they just work, and they just bring the income, but they don't want to see those steps. So what is your best advice for entrepreneurs that are struggle to feel comfortable reading numbers and talking about numbers?
For solopreneurs that are starting, you do need to have, and this is a lot of people don't just pay attention. They're so busy. That's why I call it distraction taxes. They're so busy about lifting up the airplane of their business, but taxes is a major thing. It's a major expense that if you're not paying attention now, it's going to hit you later on. And so you do need to have a cockpit. What I mean by a cockpit is a flight deck or a dashboard. You need to have something where during tax season, you have your dials, meaning, okay, I know, because this way you don't forget, this is my miles, this is for my home office expenses, and this is for my bookkeeping, how I'm running my bookkeeping. But you have all these dials so that every year during tax season, you have this dashboard, and you don't forget to report something, and you keep track every year. That's what I have this tax cockpit. That's one. But obviously, the only reason we have this business is not just to pay the least amount of taxes. We also want to make money, right?
Exactly.
And so that's how come I have the main accounting the main accounting cockpit that I am setting up. I don't have it ready yet. It's a course that I'm putting together, but it's a cockpit where you have your profit and loss, you have your balance sheet, but you take that information in a readable way to keep track every year how you're doing, and also to be putting money from how to set up your bank accounts so that you actually use not what the IRS wants you to use, which is revenues or sales minus expenses equals profit. That doesn't work for you. That works for the IRS. What works for you guys is sales minus profit equals expenses. I want solopreneurs to secure the profit. And I know that's a mindset thing it's gonna take some time to work on it, but you do need to have your account set up in such a way that you pay yourself first, and then whatever is left you use for expenses. And I have that in one of the steps is wealth multiplication for your business. You need to really have, even if you don't use the cockpit that I have, you do need to have some sort of dashboard in Excel that you use once a year, and the other one that you use for your business every other week. The biggest problems the reason why solopreneurs fail a lot is because they do not have their numbers in front of them all the time. They're too busy trying to lift up their business. But one of the main focus of your business is paying attention to those numbers. Billionaire Fertitta, he sees his numbers every single morning. No wonder he is a billionaire. We need to learn from those people, you know? And with here, it's bi-weekly. This is, the problem is that it's lack of clarity. But those are the steps that I have in there. The way you set it up, your digital files, you need to organize, the way you set up your bank accounts, the way you set up your bookkeeping, your cockpits, and your resource. You need to have your resource cockpit for the main resources that pertains to your business.
Correct. Yeah, that's great. If you can go back, Susan, really quick, the page where you have your contact information, that way, you know, if there's anyone here that they would like to connect with you and ask you any question. This is great. I mean, to have this from you is amazing, because this will help you to save a lot of, you know, taxes if you follow up.
Yeah, people don't realize that it's the little things that makes a difference. It turns out that the long way is really the short way in order to succeed in business. Clarity and order is the foundation to truly grow your business.
Correct.
It starts with organization.
That's true. And Susan, do you think we should have like another section to talk about the vehicles? Because this is something that most of us as entrepreneur, we also buy vehicle, you know. Sometimes you don't know where to put the vehicle, if will go under the company or maybe personal, in terms of the mileage at the end of the year when you need to report those mileage. And that's a big topic. So we may be able to bring a topic like that, because I think everyone is related to, you know, to the vehicle and where to put that vehicle, if it's under the personal or the business. So would you be able to do something like that for maybe all of us?
Yeah, definitely. You mean like how to deduct miles?
Exactly.
Definitely.
Sometimes it's better to put the vehicle under your personal and then, you know, report the mileage, or maybe put in the company and then go for the, I think it's 17 or 2, I don't remember the name of that form, where you are able to report all those mileage on your vehicle and get a deduction.
Oh, I'm gonna tell you right now.
Okay, that's great. That's great.
I'm just gonna tell you, you're a solopreneur, do not put your car in your business. Don't make that mistake, please.
Okay, that's a big deal. That's a big deal. Can you tell us why? Just, you know, like that quick.
Yeah, use your car under your name and charge your business the miles. That's what you want to do, because the moment you put your car in your business, that means the business owns this car. The moment you use that car, even if it's just 5% for business purpose, that 5%, I'm sorry, even if you just use 5% for personal purposes, that 5% becomes earned income in your taxes. That means, let's say you use your car 50% of 60% for business, but 40% for personal purposes. But the car is not yours, it's the business's. That means that you can deduct the 60% because you used it for the business, but that 40%, you have to render that as income and pay taxes on it. That's why you never want to do that. The only reason why you want to put a car in the name of your business is if you know for sure you're going to use it 100%. Otherwise, it's a chaos. I mean, I I did mild vehicles for a multi-millionaire corporations, and they own cars. The business owned those vehicles, those cars, and every time the owners or the shareholders use a little bit for personal purposes, I had to put it in the W-2 because that's what the tax law says. So it becomes taxable. You never want to do that unless you're going to do it for, and another thing, the depreciation recapture, there's another thing. So it's okay if you're going to use it 100%, but if you're not going to use it 100%, please do not. Please do yourself a favor and do, and give your, and also for your accountant, because accountants may not understand exactly how the intricacies of the tax law, how it works. And so in regards to a vehicle being owned by a business, and so they might not report it correctly. That's another thing. And so in these corporations, I mean, it's over a $13 million corporation. So we have to go according to the law with every single thing, because a multi-millionaire corporation is gonna have the chances of getting audited much more often than a small one, obviously. So yeah, you do not want to put your car under the business unless you're going to use it 100%. You want to use it under your name and keep that mileage, because that mileage is not being kept by people. You want to try to keep a record of your miles in your glove compartment or in your phone. Because the IRS knows that there is money on it, because the IRS know that solopreneurs do not keep up with their miles.
Oh, wow.
So they know they have money in there. Yes.
Wow, how interesting. Susan, I would like to give the opportunity to Bruni. She's also here. I don't know if Luigi and Jackie, Rudy maybe have any other question, but Bruni, if you have any question, go ahead and open your microphone if you are able. I know you, some of you land late into the room, but you are able to ask questions if you have any. All right. I think we're good, Susan.
Excellent.
Yeah. Thank you so much. Let me stop. Can you stop like sharing the screen and go back to say, let me see, share screen. Let me see if I can share the screen.
Right there.
Great. Yeah. Yeah, so if any of you guys have any question, I will be more than happy to, pass to Susan, or you have any question, you can also send us an email, or, you have the phone number from Susan. We're gonna write it down on our video, so that way you can connect with her as well. But thank you so much, Susan, for being here. You've been great. There's a lot of information, but it's so great because we need it. Most of us, I think everyone here is entrepreneur. Also, people that are online, so they are watching us, and I'm sure a question will come to you, and we will be able to help them. So people, I think they doesn't know that you work for corporate America for a little while. And that's why we also get along, because, we both come from that side of the business. And that's a great thing to know also that you are EA. Can you explain a little the EA?
Enrolled agent.
Exactly.
Yeah, an enrolled agent is someone who represents taxpayers anywhere in the 50 states in the US. We're able to represent taxpayers in any types of tax matters. And so we pretty much are like the attorneys or the CPAs, and we don't have any limitation as to how we can represent taxpayers before the IRS. Our focus is the tax law, is the compliance of or clarity of the tax law. That's really our main focus compared to an accountant. An accountant is someone who deals a lot with the numbers in the tax law also, but enrolled agents, we focus on the numbers, but we focus more on the compliance of the tax law.
Great, great.
Just making sure we do it right.
That's good. Yeah. So thank you everyone for being here. Thank you, Susan, again. I just want to appreciate your time, and I can't wait to see you next week. We have some other topic that we will be promoting as well. But like I said, the main idea is to give a little bit to others and find answers on things that you may be able to pay someone, or, you know, hire someone to help you with that. And that's why we bring in Susan and people to answer those questions, people that are in the market, they have results and they already working with other customers. So that's the whole purpose. Thank you for being here. God bless everyone.
Thank you. And God bless everyone too. Appreciate it.
Thank you. Thank you so much.
Thank you, Jackie. Thank you, Rudy. Thank you, Lourdes and Luigi.
Thank you. This was great. Thank you so much.
You're
Okay.
welcome. Thank you, guys. Bye-bye. See you next.